900 million people use ChatGPT every week. OpenAI just raised $122 billion, and the company is still not profitable. Sit with that for a second. Now here's what I want you to hold on to until the very end of this video, because there is a winner in all of this. A massive one. But it's almost certainly not the company you think it is. Stick around, because by the end I'll show you exactly who's getting rich off the AI boom while OpenAI burns through cash at a speed that would make a Vegas high roller uncomfortable. Okay, let's start with the number that broke the internet in late March 2026. OpenAI closed $122 billion in a single funding round, not 122 million billion, with a B. For context, that's more than the entire annual GDP of some European countries. It's the largest private financing deal in the history of Silicon Valley, and it's not even close. The valuation landed at $852 billion. That puts OpenAI in the same neighborhood as Berkshire Hathaway. A company that was a non-profit research lab 11 years ago is now worth more than almost every publicly traded company on the planet. And yes, they're heading for an IPO. They filed a confidential S-1 with the SEC, Goldman Sachs and Morgan Stanley are running the deal, and Sam Altman is eyeing a September listing targeting a valuation above $1 trillion. That would make it the most valuable tech company to ever go public. By a lot. Alibaba's 2014 IPO was the previous record. OpenAI would be 4 times that. But here's where it gets crazy. OpenAI is reportedly losing approximately $1.22 for every single dollar it brings in. The company's projected cash burn for 2026 is around $27 billion. $27 billion in 1 year. So we've got 900 million weekly users, $2 billion a month in revenue, an $852 billion valuation, and they're bleeding money at a rate that would make most CFOs physically ill. How is this possible? And who on earth thought it was a good idea to hand these people $122 billion? Let me explain the logic, because it actually makes sense, and it tells you everything about where the real money in AI is sitting right now. Revenue is genuinely exploding. OpenAI says they're growing 4 times faster than Google, and Meta grew at comparable stages. At the end of 2024, they were making $1 billion per quarter. Now they're making $2 billion per month. That's an 8 times jump in revenue in about 18 months. Their API processes more than 15 billion tokens every single minute. Enterprise contracts now make up more than 40% of revenue. Their coding agent, Codex, went from nothing to 2 million weekly users, and usage is growing 70% month over month. Oh, and they launched an ads product. The ChatGPT Ads Manager crossed $100 million in annualized revenue in under 6 weeks. 6 weeks! For comparison, most SaaS companies take years to get to that number. So the revenue story is genuinely wild. The problem is, the cost story is wilder. Building frontier AI requires insane amounts of compute. Every query you run on ChatGPT costs money. Training the next model costs more. Data center build-outs, GPU clusters, cooling systems, power infrastructure. Sam Altman himself said the infrastructure spend could exceed $1 trillion. That's not a typo. And that's not OpenAI's money alone. That's the whole Stargate project. OpenAI's joint venture with SoftBank targeting $500 billion in AI infrastructure investment over 4 years. Here's the real story, though. And this is where it gets, honestly, a little insane. Look at who funded this round. Amazon committed $50 billion. Nvidia put in $30 billion. SoftBank put in $30 billion. Microsoft participated. That's not a group of passive investors clipping coupons. Those are OpenAI's most important vendors and infrastructure partners, writing enormous checks to the same company that's paying them enormous fees. Amazon runs a huge chunk of OpenAI's cloud infrastructure through AWS. Nvidia sells OpenAI the GPUs that power everything they do. When OpenAI raises $122 billion and announces it's going to spend that on compute, well, where do you think that compute comes from? It comes from Nvidia and the cloud providers. So Nvidia and Amazon invest $30 and $50 billion, respectively, into a company that will promptly use that money to buy more Nvidia chips and more Amazon cloud capacity. This is the most elegant circular money machine in the history of technology. And honestly, it's kind of genius. Nvidia's stock has been on a trajectory that looks less like a chart and more like a physics violation. Every dollar poured into AI infrastructure eventually flows through Nvidia's hands. Every startup, every enterprise deployment, every ChatGPT conversation, the GPU tax gets paid. That's not a knock on Nvidia. It's an observation about who built an actual moat in this industry. Now, let me give you the honest contrarian take, because that's why you're here. OpenAI is an extraordinary company. The growth numbers are real. But the valuation math at $1 trillion requires you to believe a few very specific things. You have to believe that revenue keeps compounding at current rates, which is possible, but not guaranteed. You have to believe that competition from Google's Gemini, Anthropic, Meta's open source models, and a dozen others doesn't compress margins, which is a bold assumption. Google Gemini went from near zero to over 20% AI market share in a single year. That's not a footnote. That's a warning sign. You also have to believe that the cost structure gets dramatically better as the models improve and compute gets cheaper. And actually, there's decent evidence for this one. Each generation of hardware improves price performance significantly, and model efficiency has been improving too. So the burn rate isn't necessarily permanent, but it's real right now. Here's what actually bugs me about the coverage of this story. Everyone focuses on the OpenAI headline number and treats it like a binary. Either this is the greatest company ever built, or it's the biggest bubble since Tulip Mania. Both of those takes miss the real picture. The real picture is that regardless of whether OpenAI wins the AI race, the infrastructure layer, the picks and shovels play, is printing money. Nvidia crossed $1 trillion market cap. It crossed $2 trillion. Amazon's AWS and Microsoft Azure are fighting over who gets to host the AI gold rush. Every dollar going into the AI ecosystem gets taxed by the infrastructure layer before it reaches anyone else. So if you're watching this and thinking about what the AI revolution actually means for your money, your job, or your business, here's the honest version. The companies most exposed to AI hype are also the ones most exposed to AI competition. OpenAI has the best brand, the biggest user base, and an IPO coming that will be the most watched financial event of the year. But they've got real competitors closing the gap, real burn, and an IPO market that will ask hard questions about the path to profitability. The companies least exposed to that risk are the ones selling shovels to every miner, regardless of who strikes gold. Compute, cloud, data infrastructure. Those businesses don't care if OpenAI wins. They care if AI spending grows. And AI spending is growing. Gartner forecasts global AI spending to exceed $2 trillion in 2026 alone. Now, remember the question I asked at the start? Who's actually getting rich? It's not the person paying $20 a month for ChatGPT Plus. It might not even be OpenAI's early investors if the IPO prices in all the optimism already. The companies getting genuinely, structurally, durably rich off this moment are the ones OpenAI keeps writing checks to, the ones who get paid whether ChatGPT wins or loses. The infrastructure layer, the GPU makers, the cloud providers. They invested in OpenAI, and they're OpenAI's biggest vendors. They literally cannot lose. That's the story underneath the story. And now you know it. If this kind of AI money breakdown is your thing, subscribe. We do this every week.